story of the last few years is that we've all learned collectively that history does not go in one line. It can swing back and forth. And 3 points to make about this. Firstly, that this is obviously pretty scary for people, because one thing that anthropologists constantly say is that we are all hardwired as humans to assume that the world and the assumptions that we grew up with are normal, natural, and inevitable, and everybody else should essentially adopt them. And the world that most of us grew up with was indeed this period, or rather developed our professional careers in, was this period after the collapse of the Soviet Union, after the end of the Cold War, when we all thought that history was going in one line towards ever-increasing globalization, democracy, and free market capitalism. So it's a scary, scary moment. And one way to make sense of this moment is to borrow a concept which is found in anthropology called liminality. Liminality. It comes from the Latin limus, meaning door, and it refers to the idea that in anybody's life cycle or any society's developments, there are periods of time when essentially you go from one stage to another, and you go through a door, if you like, from one system to another system, or one stage in your life as a human being. And for a period of time, when you're in that liminal moment, you're often suspended in limbo, as it were, a bit like a maggot turning into a butterfly when it goes into a pupae. And at that moment, there's tremendous flux, tremendous uncertainty, tremendous contradictions. And that's kind of where we are at the moment, as we move away from the order which dominated from 1989 onwards to, I would argue, about 2007, 2008, where essentially we're frantically trying to work out what the new world order is going to be like and what it will mean. And that's riddled with contradictions. I just to point one of them, I said earlier that the idea of globalization is under attack. And yet, if you look at the NYU DHL survey, which I would urge all of you to do, what's really striking is that actually, if you look at the level of global interconnections, they're not all suddenly going into retreat at all. In particular, the internet connection, the digital information connection, has exploded dramatically in recent years, even as everyone's talked about globalization being dead. And that has all number of really significant implications, most notably, as we've just seen with the collapse of Silicon Valley Bank. We're living in a world where information can zip around the world incredibly quickly and create all kinds of unexpected feedback loops, which have tremendous implications for anybody who's looking at financial markets. I mean, the type of speed that we saw in the Silicon Valley Bank collapse with the so-called digital herding, in my view, is simply a premonition of other ways that we can see digital herding in markets going forward. So the world is becoming, in some ways, less globalized, but in other ways, globalization continues in ways that have very significant implications. Another contradiction, again, from the impact of digitization, is that on the one hand, we live in an era of increased autocracy, increased hierarchical command, where you've got all number of politicians who are trying to control different countries, whether it's Xi's China or Putin's Russia. But on the other hand, the era of increased digitization is also in a world where essentially you've got growing powers of lateral networks, self-organization, and an ability sometimes of the crowd to topple the leaders. One way to make sense of the Ukraine war, speaking as someone who's, as I say, was an anthropologist in the former Soviet Union and has spent a lot of time there, one way to make sense of the Ukraine war is basically it's a conflict between the power of lateral, digitally based networks versus autocracies. Ukraine's a lateral, digitally based network society at the moment. Russia is much more of an autocracy and hierarchical model, and it's losing. So, liminal period full of contradictions. And two other key points arising from that. Firstly, if there's one thing I want to impress on you all today, it's that a period of liminality and flux is a time when it is absolutely deadly to rely on tunnel vision to navigate the world. You need to use lateral vision. And by that, I mean in particular that in that period from 1989 to 2007, and actually before that, when the world did look as if history was going in one line, a whole suite of intellectual tools sprung up, which most of you would have used to navigate the world with, which appeared to be very effective when the world was going in one direction. And those tools I have in mind are things like economic models, corporate balance sheets, big data sets. And all of those are fantastically useful if you are confident that you don't need to look at the context of your models. By that I mean that when an economist has a wonderful model to plot the future, the model is only as good as the inputs into that model. And if the things outside that model is stable, then that's fine. But if the context is changing, then it really matters what you haven't put into your model or onto your corporate balance sheet. And the story of the last 15 years is that all the stuff that the vision of the future defined by Milton Friedman, that all the stuff that was left out of the Milton Friedman style models have started to really, really matter. That stuff includes things that economists used to call externalities, like the environment, which wasn't in the model 10, 15 years ago, like social conflict, like medical risk, like the way that technology is changing human culture very rapidly. As I said, the rise of digital herding, which wasn't in any of the bank's models or the central bank models when they tried to analyze what would happen with bank runs a few years ago. Technology is changing human culture. Another example of something that wasn't on the model is what the World Economic Forum, the Davos crowd, calls rather politely geopolitical conflict, i.e. war. So if you just use lateral vision, if you don't look at the context of your balance sheet and your economic models, you are going to run into big problems. It's a bit like walking through a wood at night with a compass and thinking your compass is so technologically brilliant that you can navigate. Well, yes, you can, but if you walk through just looking down at the dial, the face of your compass, and never look up and around, you're going to walk into a tree, no matter how brilliant your compass is in a technological sense. So my last point, very quickly, because I know I'm out of time, is that as you try to make sense of a world of liminality, of a world where you need lateral vision, not tunnel vision, there's one particular acronym I would suggest you should all think about as well, a 4-letter word. No, that's not risk, R-I-S-K, and it's not even VUCA, the volatility, uncertainty, complexity, and ambiguity acronym, which became very fashionable a few years ago as people tried to put a name on a world where history, if you like, is not going in one direction, it's going backwards too. The acronym is SPOF, single point of failure. Because one practical implication of this regime change, this zeitgeist change, is that in a world where history is going in one direction and everyone assumed that globalization, capitalism, and democracy would just get deeper, we didn't just build a world of global connections. We built a world where people were streamlining constantly on a customized basis their own logistical management and their exposure to risk. And that has created in the modern world endless concentrated points of potential failure where risks reside, which weren't visible but are becoming so. I'd argue that one of the first times we saw that was back around AIG financial products during the financial crisis, where all of the complex financial chains that banks had created to manage their individual risks, they'd failed to notice that they'd actually reconcentrated risk in a massive way on AIG financial products. And when that threatened to snap, it really threatened the wider financial system. We saw that during the pandemic and during the trade wars around supply chains. In many ways, ports were the real-world tangible trade equivalent of AIG FP because you had extraordinary concentrated risks in single points of failure, which people had ignored before because of this assumption about history going in one direction. In some ways, I'd suggest the digital networks we all rely on are another potential SPOF, because as you just heard in the earlier conversation, we all rely on the internet through these complicated chains almost every day. We rarely think about the fact that, by way of one example, underwater cables carry a lot of internet in parts of the world which are single points of failure. We rarely think about the fact that the large financial companies, which are the large tech companies, big tech companies, which are increasingly dominating our financial space, essentially come with extremely concentrated patterns of reliance and vulnerabilities in relation to cloud computing. It's a point which regulators are increasingly aware of in places like Basel. But the single points of failure around our digital space are striking.